Is Fibonacci a day trader's best friend? Is it something that'll work for you? It's coffee with Rob. Come into the office with me today and let's talk about Fibonacci. Let's see if Fibonacci can work for you, the Fibonacci sequence that everyone talks about. Now, I've been doing this for 30 years, and for those of you who don't know me, I'm Rob. And for those of you who do know me, welcome back, and don't forget to come and visit the live shows during the week as well. I normally don't trade with indicators. I normally don't trade with anything on the chart. I simply use price action, support and resistance, and trends and that sort of thing. But I do like to show people how certain things work in the market, certain indicators, certain systems. Because at the end of the day, we all know it's not the systems that make you the money, it's the strategy. So after we've been to the charts and I've showed you how the Fibonacci sequence can make you or give you a high probability trade, let's say. It can give you a high probability of a win in the market. Then I'll show you the strategy that actually makes you profitable. Because all the systems in the market, everything in the market, every trade you take in the market and every strategy that you have is effectively a 50-50 game. And I know that so many of you struggle with this concept. I know that so many of you don't get the concept of the 50-50. I get loads of comments on that. It's insane actually, the amount of people that just can't grasp that the stock market's a 50-50 game. And I think it's this reason. I think the main reason behind that is so many people go on courses and they get taught that the system's going to make them money, and nobody tells them about the strategy. Nobody tells them about the psychology of trading, and nobody tells them that the actual plan in the market is to have the right psychology when approaching your trades and actually making a profit out of a business plan or a strategy, not a system. Nobody's told you that a win rate's not going to make you money. It's just going to give you something to boast about. It's just going to give you a win rate. Why doesn't a win rate work? Because you can win 7 trades out of 10, but if the 7 that you won only make you $10 and the 3 that you lost lose you $1,000, you got a net loss, even though you got a great win rate. So you didn't manage your trades correctly. You haven't managed your risk to reward correctly. You have no business plan in your trading. You're simply trading a system that a primary school child could learn. Let's be perfectly honest, guys. The squiggly lines, the charts, the candles, the systems that are out there, a primary school child could learn these. A 6-8-year-old child could learn these systems over time. It's not the system that's difficult. Why do you think that 60 to 80% of traders lose money swing trading, position trading? Why do you think that is? Do you think it's because the systems are really difficult? No, it's because once you put real money in the market, it becomes really difficult to get yourself around it, to understand it, and to figure it out. Everything changes when you put real money in the market. The fear receptors in your mind kick in, your adrenaline starts running, you start doing silly things and you start making strange mistakes. And then you go and change the system again because you think the system's not working, but it was working, but now it's suddenly not working. So you change it anyway. And it works for a couple of times because you're confident again, and then it fails. And when it fails again, you go, oh, that system's not working. You go and look for another system, and then you try that system, and you repeat the system over and over and over again. It's like a little cycle. It just goes round and round and round and round, and it never stops. It just keeps on going round and round and round and round. That's the problem. The whole problem is you believe too much in a system and you don't have a strategy. Now that I've told you that a system is just a system and it's just a high probability trade, I'm going to take you and show you the high probability system, the Fibonacci system, which works so well in confluence with all the other things that we do. For example, we use support and resistance, standard support and resistance, and the Fibonacci sequence sort of fills nicely into that system, into price action. It works really well with it. And then also, if you're trading with trend lines or trends, the Fibonacci system tends to give you a lot of confluence in your trades, and it works really well together with that. What I'm going to do, I'm going to take you to the charts, show you how the Fibonacci sequence works and how you can use it with the rest of our trading. And then I'll take you and I'll kind of talk to you about the strategy, the psychology that you need to win in the markets. Let's go to the charts first, guys. Let's check this out. Let's have a look at the Fibonacci sequence and show you how you can trade with a Fibonacci sequence. Yeah, right. So I'll just take any old one, and the FTSE's right on top here, so we can quite happily use that. One of the things you can do you might be looking for a trade over here. What you got to do is draw your Fibonacci in. And what we're going to do, we're going to draw it from the top here. We're going to draw it down to the bottom. Okay. And that gives you a Fibonacci sequence. Okay. Now, Fibonacci is measured in percentage. Basically, that would be 61.8, 0.61.618, 0.786, 100%, 0, 0.236. Fibonacci is a sequence found all over the world, all through life, all through the universe. And they figured out that this number sequence tends to attract things at a regular basis. So if you want to know more about that, you can go and read up on the general consensus on Fibonacci sequences. It applies to things like staircases and certain types of plants and all kinds of insane, strange little things. So go and have a look for yourself. It's quite interesting, and it's got a lot to talk about. But what we look for is the golden zone. What you look for in Fibonacci is that golden zone. So if I was going to go short on the FTSE now, if I was looking for an area on the FTSE where it's bounced back up and I wanted to carry on going down, I'd be looking at this 61.0.5 to 0.618 level area. We call this the golden area. This is an area that we call the golden area, and that's the area that we're looking for. Now, if the price comes back up into that area, what you're looking for is for it to give you a red candle and start going back down again. Now, if you look at here, we had a supply of money which played out, and you were looking to see if it would turn back off that area on support and resistance. And it plays very much into the golden zone as well. Now, this one didn't work out. It actually broke to the upside, broke through the 618, went up to the 786. But now you have another level to look at. You could say, well, this could be an area of interest as well. It could break down from here. So that's if you're looking to counter trade it. And if you were going to counter trade it, that would be what you're looking for. The trouble you have with a trade like this is here you have trend resistance that it's broken through, and that would project that it's a long trade. So I wouldn't go short on this particular trade. But the Fibonacci, when it gets into the golden zone, if you get a red candle out of the golden zone, you can take a chance and take the short. But now, let's say you're looking the other way. Let's say you want to go long. So you take the Fibonacci and you draw it up into this level here. There's your levels. That's where it's sitting at the moment. Let's say this comes back and starts coming back into the golden area. You can wait for this to get back into its golden area here. And if it gives you a long trade back out, you can take the long trade back up. And that's as simple as it gets, really. You can also trade off these 0.382 levels. You can trade off these 0.236 levels. It's not impossible to trade off these levels. It's, I don't use indicators myself. Indicators for me are, did I remove it now? Yeah, I did. Indicators for me just get in the way. Let's have a look at the US 500. What have we got on the US 500? Now, my opinion of the US 500 is you're most likely going to get a short on this trade. And you can take the Fibonacci all the way from the bottom here, all the way to the top, and see what we're going to get. But if I draw this in from here to here on the US 500, what it's showing me is that the golden zone is at the 55 level. And that's effectively what I'm calling the short as we stand at the moment. I'm saying if it breaks through this level with its head and shoulders, it's going to come back down into this 55 level. And then it'll probably project long from there. And that's exactly what we're looking for. So the Fibonacci kind of does play a confluence into the type of trading that we do. Do I recommend that you only trade with Fibonacci? Certainly not, obviously not, because I don't trade with it as well, and I don't believe in trading with indicators. I don't believe indicators are the answer to our trading, but they do give you some confluence. I know that I'm looking at this level, and if you look at this level, this really is a serious support level. Look at it, it's right in there. So it picks it out pretty well. You can take any trade. Let's go and take pick a trade. I really don't know what to pick here. Shall we pick a currency? Let's go to the most popular one, the Euro US dollar. Okay. Euro US dollar. What do we got here? It's very bearish. So obviously we're looking to see when it's going to go up again and go short. So you draw that in there. Now, if you look at this, there's your golden zone up at the 1.08 area. In other words, if this was to bounce up back into the 1.08 area, that's sort of $1.08, or I think it's, then basically it's in that area, and you can start looking for it to either come short again, or you can look for it to break through and go long. And it just gives you that confluence. Now, if I take the Fibonacci out, and I say, let's remove the Fibonacci, and I look at this area where the 108 is, there's a large area of money lying there. So there's a very strong possibility it'll get there. But what it does tell you, for example, if this breaks through that trend resistance and you go long, at least you know that when you get to this level, that's an important level. And you can use it as confluence to identify these levels for you. You can also use it, for example, if you just want to trade off all of these different levels, for example, 0.236, 0.382, you could trade off there as well. You want to trade off 0.5, you can trade off there as well. Yeah, you can trade on breakthroughs, you can trade on red candles, out, down, that sort of thing. So you can use it for that sort of confluence as well. So that's your Fibonacci. It's a sequence that really does work into and work well into these sort of areas that you draw in the first place, and it kind of lines up with what you are already doing. Look at this Brent, for example. Here's a little move that went from there to there. Okay, so Brent is long at the moment, but if it was to come back, it would come back into this now support area, take some money here, and then go back up. And there's your area. There's your golden zone, 0.5 to 0.618. Comes back into there. You're definitely taking a long trade and going back out again. That's how people use the Fibonacci. That's what they use it for, and it kind of works for people. So if that's what you're into and that's what you're interested in, that's how the Fibonacci works. Like I said to you before, I don't use the indicators, so I don't bother with them. I prefer to sit without them. I just use the support and resistance and the trend lines. That's all that matters to me. So now you know how Fibonacci works. It's just a high probability system, guys. At the end of the day, you need a psychology and a system that's going to make you money in the markets. You can't trade without this system. You can't not use it. Coffee with Rob. So let's have some coffee. See, the whole thing is, you've got your high probability and you take the trade and then it's up in the air. Then you're just hoping that you're going to make a profit and hoping that you're not going to make a loss. Where's the plan in that? And I can tell you now, if you're a scalper and you're someone who's trading 5-minute charts, don't forget 99% of people lose on those. But okay, believe me, don't believe me, doesn't matter. End of the day, if you're a scalper, I can almost guarantee you that you're not going to look after your stop loss. There are so many that don't. There'll be 1 or 2 guys that can psychologically overcome that and take their stop loss and all the rest of it. But I can guarantee you that most people trading fast and trading scalping and that sort of thing will take big losses on those losing trades. The minute it goes into a loss, you'll be waiting for it to go into a win because you were very confident when you took that trade that it would work. So you'll wait, it'll get more loss, and you'll wait a bit more, and then you'll dollar cost average, you'll double up on the loss, and it'll make the loss even bigger, and you'll move the stop loss away because you don't want it to take out the stop loss, and it'll just get worse and worse and worse and worse. And if you don't blow the account, you'll certainly lose a large portion of it. At least that's most of you. Not all of you. Some of you might be more cautious, which is why it's much better for you to swing trade, to go a bit slower, and to do it with a bit of a strategy behind it. Now, the strategy is simple, guys, and the strategy is this. And I'm going to tell you guys the strategy in every single video because this is the most important part of your trading journey. This is not the back end part. I know I always put it at the back end of the video, but it's the most important part of your journey, because if you don't get this right, you don't get anything right. In fact, your whole trading journey is a waste of time, and you've just got a mishmash of trades, and you won't be successful for years and years to come. And you'll be wondering why, and you'll be changing systems over and over again until eventually the light bulb will come on and you'll think, oh, well, actually the market is a 50-50 game because there's so many buyers and sellers out there, and actually perhaps I should have had a strategy. So here's the strategy, guys. Very straightforward, very, very easy. First one, it's a 2-step strategy. It's not complicated. You don't have to write it down. Believe me, you do not have to write this down. What you got to do is look at the size of your account. Now, the size of your account is the size of your account. It's the account that you created. It's not whether it made a profit or loss or whatever the case. Don't change the size of the account on a regular basis. If you have a $100,000 account, that's the size of your account at all times until you decide that it's a different size and you're going to trade with different amounts. So you've got to keep things the same, because the minute you start changing things, that's when you start taking losses. So if you've got a 100,000 account, that's it. Then you've got to say, I'm going to risk 1% on every single trade. Or you might risk 2%, you might risk 10%. I don't know. You can choose what you want to risk on every trade. But the hard and fast rule is keep the risk the same on every single trade, no matter what the trade, every trade, whether it's indexes, whether it's commodities, whether it's Forex, whether it's crypto, it doesn't matter. And whether it's your favorite or not favorite, keep the risk the same. But we're using 1% on this particular lesson. So 1% it is. So 1% of a $100,000 account would be $1,000. So now you're going to risk $1,000 on every single trade you take. And why are we keeping it the same? Because the market's a 50-50 game. In other words, the high probability is, because there's buyers and sellers in the market, the high probability is that if you take 10 trades, the high probability is you'll lose 5, you'll win 5. But it doesn't help if you lose the same as what you win on those 10 trades. What you want is to make more on the wins, lose less on the losses. Thus the $1,000 stop loss on every single trade. Also, with the 1% rule, if you were to lose 10 trades in a row, which is usually unexpected, you would only lose 10% of your whole account. Not bad when you consider things. Here's the trick, guys. And it's a simple trick. Then you go to the trade, you look at the trade and you say, how am I going to put $1,000 stop loss in here? And you say, I'm going to look for an invalidation area. This is another thing that you guys are struggling to grasp. When you put a stop loss in, you can't just put it anywhere. You need to put it in an area. If the price gets to that spot, the trade is completely useless. In other words, invalid. That's where you want your stop loss. You don't want the stop loss in an area you know the money's there and the thing's just going to come and look for liquidity, take your stop loss out and go the other way. You want your stop loss in an area where you know, hey, if the price reaches that point, this trade's invalid. I'm crazy to keep this trade. I wouldn't take this trade if it got to that point. That's an invalidation area and a genuine stop loss. How difficult is that, guys? It's not difficult. Now, you work out how much $1,000 is from that invalidation area back to the cost. How many contracts can I buy? How many points can I buy? How many shares can I buy? Whatever you're trading in, work out that cost. Okay. Now you know how many contracts you can take or how many points you can take or whatever the case, you know the size of your trade. Then what you want to do is make sure that you're not going to have a take profit that's $50 away when you're risking $1,000 because that's just insane. What you want is a take profit level of around 2 to 1, maybe $2,000. If it's 1.5, it's okay. If it's 3 to 1, bully for you. But you want your take profit way above what your stop loss is. But not in a sense that you can't reach it. Not in a sense that take profit's like crazy, like you'll never get there. You want to take profit that's achievable, so your risk to rewards got to look good. In other words, you got to look at your take profit and say, you know what, the price could definitely get there because I've seen in the past the high probability is that the chart will get to that level and I will make a kind of a profit there. So yeah, I'm gonna put it in there. That's the important part, guys. So now you've got an achievable target that's 2 to 1, and you've got a stop loss. Now the easy part, the part where you have to like watch your trade taking a loss, or the part where you have to watch the profits run and sit in your hands and not take them. The easy part. It's never easy, is it, guys? This is the most difficult thing you're ever going to have to do in your life when it comes to this. And that is when your trade goes into a loss and it goes into that stop loss area that you've created, is to not dollar cost average and to let it take your $1,000 stop loss out if it needs to. Unless, of course, you close it before it gets to the $1,000 stop loss because you decide, well, it's invalid before it gets there anyway, and you get out of the trade because the least you can lose, the better. If you get to that stop loss and you want to move that stop loss away because you want to stay in the trade in a loss, try to understand this. Try to think for yourself, okay? I put that stop loss at that invalidation area because I believed that my trade wouldn't be worth anything if it got to that area anyway, so it would be a completely worthless trade. Why would you move the stop loss away at that point? That would be silly. Also, if the trade goes into a profit, it goes $300 into a profit, and you want to click the sell button, why would you do that? Whack yourself on the hand, sit on your hands, do something, because you don't want to take that profit. You want to take the 2 to 1 profit. Now what you do is if it gets $700-800 into profit, you move the stop loss up to break even or even $100 in profit, understanding that that actually will be how you're going to make your money. You're going to follow it up with a trailing stop. When it gets to the 2 $2,000 target that you set, then move the stop loss right up behind it. Don't just take the profit. If it comes back and takes it out, you've made your profit. If it doesn't and it continues on to the upside, that's where your profits lie. So that's the strategy. It's really simple, really straightforward. And if you get your psychology around it, it's going to be great for you. So I hope the Fibonacci, I hope you understand it well. If you don't, come and join us in the live shows tomorrow. Let's talk about it. Let's go over it a little bit further if you need to. But Fibonacci is a great product to use. It's fun to use in your trading, and there's good confluence with it. Look, I don't use it. I don't use any indicators, but some of you might want to know how to use it. So there it is, guys. I hope you enjoyed it. But guys, for you that want to use the price action system that we use on a regular basis all of the time, go and watch my last videos. Go and watch the last video, which is all about strategy, covers strategy really well, and come and watch my live shows tomorrow and on Thursdays. Thanks for watching, guys. Until the next one, cheers, ciao, and bye.